consumer goods. That's the phrase on the NGX. And that's what we're talking about today because, hey, when you go to the supermarket and you try to buy stuff, you best know that you're buying a company. You're buying the vision of a company. Whether you're buying your detergent or you're buying beverages or whatever it is you're buying, you know that you're helping the balance sheet of a particular company. And what that means is that gesture of yours in the supermarket impacts what happens in the capital market on the NGX. And lots of companies in the consumer good index. Ladies and gentlemen, you're very much welcome to In Good Company. Here we talk about companies, especially public companies, companies that end with PLC. You see them in our stock market and you see them on the NGX. My name is Frank and I've got some gentlemen with me on this episode. But then before you get to know... Okay, so sitting right on our famous couch is a gentleman. When I say gentleman, he understands the numbers. He understands how to crunch these numbers, but not just the numbers, but also the insight behind the numbers. Because it's one thing for you to understand the numbers behind these companies. If you look at what has happened with consumer good index, it's done 52% in the market. Now, joining me to have this conversation as regards the consumer index, we have no other person but Abdulsalam Ayoade, who is the team lead research at Stevens Asset Management. You're very much welcome.
Good afternoon.
Yeah.
Thank you for having me.
Okay. So, is the sentiment behind this move? What is really behind the consumer index rally in from year to date? It's amazing numbers if you ask me. So what do you think is the reason behind that?
Thank you for that question. I would say it's a blend of earnings to date, which is basically the Q1 numbers and also market sentiment. Basically, a lot of these companies have posted a very strong performance in a strong profitability performance in their Q1 figures. And also, we know a lot of retail investors, they just go with positive momentum in the market. So I think it's a blend of both earnings figures and just market sentiment.
So I understand earning figures, but if you look at the companies, we have about 20 companies under this index. Which of them really appealed to you as a researcher from your point of view?
I'd say Nestle, Nigeria PLC, because recovering from last year loss now to a very strong profitability. I'd say it has been a lot of price adjustment. There has been a lot of price adjustment, a lot of bringing in new strategies like exporting. So it has been a mixture of both. So I'd say Nestle, I'd say PZ Kusin, because as at last year, we were thinking they were going to leave the market. So now because they had like a lot of profitability issues. We had news of the group saying they want to demerger the African segment. So there's been a mixture of both. So I'll also say Unilever. I've seen a lot of growth in their food segment. That has also been the driver for their profitability.
Look at earnings, and if you look at their earnings and margins, which of the companies in this index do you think had a sustainable turnaround? You mentioned Nestle, yes. And which other company do you think had this sustainable turnaround as regards their earnings and as regards their margins?
I said PZ Kusin before, and then also Unilever. So I think what has been going around those companies has been around managing their cost. So a lot of them are looking into sourcing of their inputs internally, locally, having strategic partnership with farmers, and so as to just reduce the cost. And also, they've been going into a lot of advance payment for inputs.
The market is a marathon. That's how I see the market.
Yeah.
And if you
their bottom line.
I'll speak to Nigerian breweries.
Okay, please do.
So, as at last year, they had a lot of their financial liabilities increased. So, around the closing of the last year to the early this year, we saw a lot of coming into the market, rights issues, and they've been able to raise about 599 billion. to clear to cancel out the effect of financial liability.
599 billion.
Yes.
Whoa. That's really impressive. But how sustainable is this? Because we're still in H1. We're in H2, by the way, but we're just on the start of H2. A lot of this company, look at the index has done 52%. Do you think it's sustainable towards the end of the year? And how sustainable do you think it is going into the end of the year?
Okay, so we look at what has been driving H1.
Yeah.
And we'll also see, okay, is this going to also be able to move into H2?
What drove H1?
Exactly. So FX gains.
FX gains.
Yeah, we saw a little bit of stability in foreign exchange.
Yeah, actually.
So a lot of them had lesser finance costs from foreign. So, and I spoke about Nigerian breweries. They had to let go of a lot of financial liabilities that are foreign based. I'll speak to CPI also. We've seen the interest rates.
That's the consumer price index.
Yeah. Consumer price index. We've seen a lot of conversations around interest rates. So they're going to be a cut. Now we are seeing inflation figures coming down. So the impact on this consumer goods sector and these companies in consumer goods sector. So basically in H2, what should we expect from these companies? So as we are seeing a downward slope of the inflationary figures, we should also note that closing this year, we should see MPR rates cutting by around 50 to 100 basis points. So that will also reduce the finance cost of those companies.
Perfectly. But I agree with the things that have been driving them.
Yeah.
Basically
price
led. Yes.
But I just have a feeling, not a feeling, it's factual. We're seeing it in the markets. Go ask anybody. You see consumer goods, they've been able to handle inflation gracefully. Why? Because if you look at what happens in the markets, there's a way shrinkflation. That's what we even call it, where they sachetize everything. We understand that the purchasing power of people is depleting by the day, but they have a way of meeting the masses where they are. I don't know if you get my point.
Yes.
So if you're buying like say a 250 grams of milk, if a poor person can afford that, then they would give you a product that will fit your own budget. So they still have a way of driving sales in the midst of inflation.
The revenue is the price.
Yes. So do you think there's a real recovery from the real economy, inflation, to be able to drive their volume? Do you think we'll recover, especially the index? Do you think we'll recover and to beat inflation, to increase our volume and people purchase more of their products?
I'll say to inflation, if we attain what the federal government is telling us, they want to achieve 15% inflation. So, like I said before, if
for how long? I think they said this year. Before the end of this year.
Before the end of this year.
And we have okay, let's watch.
So we are currently at 22.22. So if we are able to beat down inflation to a certain level, we will be able to see finance costs coming down, be able to see lesser prices for these commodities, increase the volume. Because what we are seeing now is price led, it's not sales led. So a lot of not volume led. So a lot of consumers, as at last year, what was affecting them was basically inflation and also the wage stagnation. So basically, you're not seeing increase in their wealth, in their disposable income, but the prices of goods and services are going up. So now what they result to? They result to smaller sachet of these commodities.
Very true.
So it's basically they are now increasing, but they are still consuming.
I remember one of my favorite biscuit then. I used to buy when I was small. Guess how much? I think it was 5 naira or so, less than that. Why did you mention the brand? But I get your point.
I remember buying
it was like you see like 8 or almost 10 inside it. You can use it for lunch, breakfast, and dinner. But now I saw it recently, and it's like 3 or 4, and I'm like, whoa. You can't blame them because obviously they're trying to meet the consumers where they are and also keep up and cut down on their cost and just money. It's so tough, that industry. It's so tough. But what do you think is going to be what's your prediction for the next 6 months? What do you think? Do you think they're still going to be leading? They're still going to be the leading index going into the end of the year?
I believe so. If they
Why?
continue with the momentum that
You believe they'll beat banking?
I mean,
You believe they'll beat banking?
I believe if you look at the performance
Into H2, let's even leave H2 self. Let's talk about now. Which of the companies do you think stood out for you, and which of the companies do you think still offer value, and what should investors? Which of them should investors approach with caution?
No, that's interesting.
Yeah,
I'd say with value, I would say I mentioned Nestle.
Be very objective.
Yeah.
Be very objective. I know. Be very objective.
Yeah. So I'll say Nestle.
Yeah.
From last year, they were recording around their stock was trading around 600. Now it's trading around 1,006, around that range.
And I think 1,650 as of yesterday. I think so.
So and these are companies with strong fundamentals. They're not just coming to make profit this year, no profit last year, except for
they stood the test of time.
Yes, they stood the test of time. Now, so it's basically what affected them last year was because of the FX devaluation and the inflationary figures, the hike in PMS and diesel prices. So I would say Nestle, I would say Unilever. I would still expect a little bit more from PZ Cuisine.
Yeah.
But I would say our caution should be around the breweries, international breweries. Even though they posted profits in their Q1,
yeah.
Their losses from past period are still driven down. Yes, also driven down their profitability. So I would say the same for NASCON. Also, their margin is very thin. So I won't really advise investors to go into.
Yeah.
So aside that, I'll also say the Cadbury.
Okay.
They're also still facing a lot of FX volatility, and so I'll say those stocks.
Well,
it's an industry that is very competitive.
I differ a bit. So you have to watch them.
Also, they've been having like an increase in capex, in capital expenditure. So they're trying to create a new refinery in Nasarawa. So it has been affecting their balance sheet. So.
Yeah. But in terms of valuation, I think Nestle has the highest price to earning ratio.
Yes.
I think about 158, which is very, very high. Very high. But let's see what happens. Maybe being that the stock is overvalued, or that the investors are saying we believe that you are going to earn more. Yeah.
The index, buy, sell, hold. What are you buying? What are you selling? What are you holding?
How can you ask me what I'm holding? You are seeing the index that is the best, the best performing index. Okay. Of course, I will buy it. It's a buy for me.
It's a buy for you. How about you?
Yeah, I'll go with him.
Okay, so the industry is so competitive, and sometimes we look at it. I understand your point. You look at it from with their numbers and look at their FX exposure and all that, but at the same time, we don't also look at it from competitive standpoint, because there's a lot of competition in the market. If you look at some of these FMCG products on the shelves, you're seeing beverages. Another competitor is coming on board. Nestle has a competitor, new competitor. So there are lots of competition, and now it's a price war. Consumers will go for what is cheaper. And so what do you have to say regarding that? Don't you think that also has a part to play in their numbers and their earnings?
The consumers are looking for what is cheap. What is cheap? Well, the ones that are cheaper.
Yeah, in the high inflationary.
But I think for me, the take is
proper research. And you've also heard from our guest, Abdusalam Ayuade, who's the team lead research, Arthur Stevens Asset Management. He said that Nestle, take a look at Nestle, because they've done amazing numbers and they've been able to come back from their days of losses. And also, he said you should take a look at NASCO. Really, just take a look at these companies and do your own research before investing. And that's it here on this episode of In Good Company. We'll see you some other time. Make sure you keep liking, keep sharing, and keep watching, using the platform, using the content to do your research. Who knows? You just might end up becoming the next investor billionaire from the NGX. I'll see you on the next episode. Cheers.